Good afternoon and welcome. You're watching MF Corner. I'm Sumaira Abidi. On the show today, first we're going to talk about some unusual themes from the mutual fund basket. Mohit Gang, co-founder and CEO of Moneyfront, will join in to talk about what these unusual opportunities could be and the kind of investors they are suited for. And so first up, let me invite Mohit Gang, co-founder and CEO of Moneyfront. So Mohit, we've in the past discussed so many kinds of mutual funds, and while some of them do sound a little bit exotic, you think there are takers for it. What are these unusual themes in the market, and what are the kind of investors they are suited for?
So, hi Sumaira, good afternoon. I think everyone knows it's a fact that Indian mutual fund industry is like a maze with over 2,500 odd schemes. So it's very difficult to figure out some unique themes and hidden gems, as you might want to call it, which are available for investors. And these are very sporadic funds, very small size AUMs, not very prominent, not highly spoken about, and very risky also. So let me be very categorical. I think what we are discussing today is perhaps those zones and schemes where an investor should ideally not be trading, or trading with extreme amount of caution, or only with a professional help if it suits the overall financial plan of an investor. So you can figure out these kind of schemes in like contra themes, sectoral funds, international funds, ETFs, and those kind of zones. You will find that there are those very specific schemes which run a very differentiating theme.
Okay, but you mentioned sectoral, contra, ETFs. I mean, these are names we've already heard quite often. What is unique in, say, a sectoral fund?
Yeah, I think I was expecting that, honestly. So look, when we talk of sectoral funds, let's say, just take an example. One might talk of an infra fund. Every fund house is an infra fund, but there are only three funds in the market, Sumaira, infra funds in the market, which don't have a banking exposure. Banking today constitutes almost 30% of the index. So there are only these ICICI Pru Manufacturing in India. You have an IDFC Infra and a Nippon Infra and Power Fund, which does not have banking. So if an investor wants that kind of an allocation, he goes for these themes. Then you have a UTI automotive fund, or an transport and logistics fund, right? So this is a very differentiating theme if someone wants that kind of an exposure. You have a global MNC fund from Birla, you have PSU funds, and you have rural consumption themes from Mahindra and Sundaram. So very different sectoral themes are available.
Okay, so basically within the whole basket of being a sector funds, you can find one or two themes which are differentiated from say the rest of the category. Commodities have done well. Would you put any commodity funds in these basket? And I don't even think all of us would know which are all the commodity funds which are there in the market right now.
Oh yeah, absolutely. So people, when they talk about commodity, they might just want to think of a gold fund. But what I'm talking out here is, let's say, a DSP Natural Resources or the World Energy Fund. It's a global fund, gives you exposure to some top global energy companies, basically, right? You have a Tata Natural Resources and Energy Fund. You have an SBI Commodities Fund. You recently saw a BNP Aqua Fund of Funds, so which kind of invests into the water value chain, right? So those are very differentiating commodity themes out there.
Okay. What about international funds? I noticed, you had put them also in the list of unusual funds. Is there anything really unusual here?
Oh yeah, absolutely. So when we talk of international funds, I think the first thing which will come in mind is like Nasdaq, S&P, a US fund or something like that. But if you
Yeah.
want a Brazil fund, or if you really want to taste an Asia Pacific fund, that's available with HSBC. You want a Greater China fund, that's the erstwhile JP Morgan fund, which is now available with Edelweiss. It invests into China, Hong Kong, and Taiwan market. So like a fantastic theme if you're really aware of those markets. You have a Mirai Fang ETF which came, which are the top 10 leading technology companies. You also have a US tech fund from Edelweiss, which again is a JP Morgan fund. So there are these very different themes in the international basket also, if someone were to look at it specifically.
Okay, and anything else that I'm missing out besides, commodity, international, everything else?
Oh yeah, so look, if you really want to figure out those very niche zones, then there are some technique-based funds also. So there is one fund from SBI which is a minimum variance fund, right? What the fund does is it's invest into top 30 companies or invest into 30 companies out of the Nifty 50 basket, which shows the lowest amount of volatility. So if someone wants to play very safe but wants to play in equity and wants a fund with very minimal volatility, then that's perhaps the zone to go in for. And all blue chip names, right? You have a Sharia compliant fund from Tata, which is called Tata Ethical Fund. So for specific religious reasons, if you want a particular suitability fund, then that's the zone to go for, right? You have a DSP World Gold Mining Fund. It's a very old fund running since 2013, invests into gold mining companies and few platinum mining companies also, right? So you would not find those kind of listed names in India. It has to be a global fund, has done very well over many years. And the whole underlying theme is that if gold were to do well, the mining companies will get a multiplier of it. So those kind of themes are available. There is also a JM Core 11, only 11 names, 9% each, and decreasing order of volatility. So there are many unique ideas which are floating around, Sumaira, if you were to say so.
Okay, so I take your point. Okay, Mohit. So we have established now that besides just the diversified equity funds, there is a whole other world out there for an investor, and I would guess a high risk investor who is interested in that universe. But the thing is, one is that the theme itself, sort of ensures that there is risk. Then the fact that I was just going through the list that you have sent us, and I mean, the assets that these funds are managing are also very small, right? So does it add now an added level of risk?
Yeah, absolutely. No, that's how I started. These are perhaps the no-go zones. In fact, the zones where one has to absolutely tread with caution and not fall into the trap of buying something exotic just because the name sounds fancy or the theme sounds fancy. It has to absolutely fit into a larger scheme of thing in one's portfolio as per his or her risk profile, and should be commensurate with the financial goal and plan. And I would strongly recommend that if anyone is going into these kind of themes, he has to consult his or her advisor, financial advisor once, a proper certified advisor before getting into these kind of zones. Look, the whole part is these are mostly all of them are risk rated very high on SEBI's riskometer, and perhaps these are like those specific sectoral zones. And as you rightly pointed out, the whole risk emanates from the fact that the AUM out here is very, very small. Most of these schemes, you will find many of the names below 100 crore of AUM, which means the volatility can be very high. Any large entry or exit can make a huge impact in the overall AUM and the volatility of the fund. Now, because the AUM is low, the expense ratios are also very high, which means typically most of these funds are running over 2% kind of an expense ratio, right? So there are multiple factors which lead to that uncertainty and risk in this kind of a zone. So ideally, it's highly recommended that an investor doesn't go into these zones unless he or she knows something about it, about that theme, or it fits into his broader asset allocation.
Okay. But Mohit, just want to check that, for these funds, what has been the growth in the recent years? I mean, are they increasingly becoming more popular?
Look, so the AUM doesn't tell you that story. There are few funds which have grown over the years, Sumaira. So let's say a DSP World Gold Fund will have a recent reasonable AUM, or a Tata Sharia fund will be about around ethical fund, sorry, as it is called, would be about 1,000 odd crores. Infra funds typically will have slightly larger AUM because people would want to invest in those themes. But those global funds, let's say a Brazil fund or an Asia Pacific fund or a Nippon Japan fund for that matter, are very, very piddly in terms of AUM, right? And that's a zone where investors should ideally avoid venturing into. Basically, look, the last take, if you were to ask me, is that you're always better off in a well diversified fund. These are highly concentrated bets, and the universe also for stock picking and selection which is available with the fund manager is very, very restrictive. So these themes ideally would not find many listed names in the
Yeah.
country, so mostly you'll find it on the global arena, and then the research ability is that much limited. So it's always good for an investor to be in a well diversified flexi cap name, And as we have been discussing, the AUMs are not fairly attractive, so that could be a slightly restrictive factor as well. So the growth is not that great, to be very honest, because people aren't aware. I think it's also about awareness as much as it is about the theme being very differentiating.
Okay, so the products, exist in the market, but like Mohit said, that it has its pros and cons. One is that perhaps it has the ability to provide that alpha to your portfolio, but then like Mohit said, that the universe in which a fund manager can invest becomes very, very restricted, and the size as of now, the scheme sizes are very, very small. So that will be a factor also, because any sort of exit opportunity by the fund may end up actually weighing down on it. Mohit, thanks very much for joining in.
Pleasure.
And before we take a break, I want to once again reiterate that this, everything that Mohit has spoken about, these kind of funds, these are for high risk investors. So retail investors who may be watching might actually want to still be wary of these funds.